Well, hi everyone. Welcome to the Buffett and Beyond Saturday Stock Market Recap, and this is March 8th, 2025. And remember, folks, if you want to live on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And let's see what happened this week. Well, the Nasdaq is in correction territory while the S&P is trying to hold above its 200-day moving average. And folks, the S&P has had the worst week since last September. In our weekly stock analysis video, Pulte Homes has corrected rather harshly since last year, but our chart is showing the housing industry coming back to life, maybe? Okay, barely moving, but trying to find a bottom in here. In our ETF video, well, let's talk about using the QQQ put options to hedge not only our ETF top stocks portfolio, but also our growth portfolio. Why? Because portfolios are leaning toward the tech sector more and more and more, and our favorite stocks like Google, like Microsoft, like NVIDIA are starting to act like tech stocks and become more volatile. Yeah, they return a lot more than the market, but they have become more volatile. So maybe our S&P 500 hedges are not the ones to use, and maybe we'll start using the QQQ put options. Now, there's something to stay tuned for, folks, as we go along into the coming weeks. And let's look at the S&P 500, and oh, what a nasty chart. And as we come down here, and I'm recording this about an hour before the market closes, well, not even, about 45 minutes, and the S&P is trying to hold on to being inside of this bottom indicator, or this bottom volatility band, I should say, really, really hard. We'll see what happens, because Monday's usually a down day, and then Tuesday's turnaround Tuesday. So maybe somewhere something is going to happen, as you'll see in the next couple of charts. Down here, this indicator is still pointing down with no hesitation about stopping its correction until we get some positive days in here, folks. And when we look at the S&P 500 candlesticks, we can see it is down. I'm talking about the S&P, down to its 200-day moving average and trying to hold on in here. So this is a very, very critical spot. And you can see down here that I mentioned in our ETF letter that the volume has been drying up, well, not drying up, but you see these red lines down here? Well, this is the volume of the market on the down days, the red vertical lines, and you can see that Thursday, which is the one I'm pointing to, is lower than it was on Tuesday. So this drop down is a good sign among all other bad signs, but we don't see today's volume because the market is still open. And as you can see down here, we are very, very oversold now. So maybe something will happen. But let's look at the Dow Jones. And here we are, the Dow Jones. And folks, I see a lower low in the market, but I see a higher low right here. And don't forget, the market's not closed yet. And boy, am I wishing, or do I really see that? I know I see this, but do I see this? And if the market could close up today, maybe there's a signal in here, a short-term signal. And down here, our intermediate-term signal is still pointing down, but just maybe. And don't forget, the Dow has not reached its 200-day moving average, so a lot of the technicians are saying, let me see it hit that and then bounce up. But we're close to it. And the S&P, as we saw in the last slide, is actually right at it as we speak. And portfolio protection, yeah, these puts are worth about 4 times more than we bought them for. So that's very, very nice as far as the puts are concerned. But we really don't like to use puts, or we hope we don't have to use puts, even though we have them here. And yeah, with the market down, 5%, 6%, we have to be thinking about these puts. And this is where I was talking about in the beginning, is that we are thinking of going to the QQQ puts, because the QQQs, which are the NASDAQ 100 stocks, which are mostly in the tech area and semiconductor area. So our growth portfolio has been acting more like the tech portfolios than it did as the overall market portfolio that we have had over the past 50 years or so, up until about 3 years ago. So maybe we have to change the puts that we buy here, but nevertheless, it'll be fairly the same. We want these puts in place, and these are going up in value as the market comes down. We hope we don't hit these points down here, but if we do, they will be fully protected, or almost fully protected anyway. And these are gaining in value as the market comes down. So we have those puts there all the time. And folks, we've had a tough week. We've had a tough couple of weeks as the market is reacting to a lot of uncertainty out there, and which companies are going to be affected by tariffs, which companies are not. Are they all, or only some of them? And we don't know until it happens because there's uncertainty in the tariffs. And folks, look at this eagle. This is the first time I have ever seen an eagle down here in Florida. And remember Debbie with the Y? Well, Debbie took this picture, and it is absolutely gorgeous. So folks, we've had a hard day, we've had a hard week, and this eagle is looking as intently as we are at the market. But this eagle is looking for some fish and not the stock market. So folks, clear your heads this weekend. Go out, have a good time, be with your loved ones, take it easy, take your mind off the market, and we'll see you right back here in a couple of days.